Welcome to Podcast 83, a regular look at the news, stories, and trends related to Michigan's 83 counties from the Michigan Association of Counties.
Good afternoon, everyone. Welcome to Podcast 83, the podcast put on by the Michigan Association of Counties. My name's Steve Currie, the Executive Director of MAC, and today we are joined by Tony Raffa from Savi. Savi is a new program we've partnered with the National Association of Counties on. And what they do there is they are a firm that provides some student loan research relief options that employers, both public and non-public, can offer to their employees. So Tony, welcome to the podcast. How are you doing today?
Doing well. Thank you so much for having me. Excited to be here, talk about this.
Yeah, no problem. So why don't we jump right into it? Why don't you give me your version of Savi, because it's probably way better than the way I just described it. So go ahead and kick us off and give us a little overview on what Savi does.
Yeah, absolutely. No, and I think you did well. But Savi, I usually like to start out with just, who Savi is, why we do what we do. So like you said, Savi is a company that helps borrowers navigate their student debt. We do this mostly by working with both employers and borrowers and bringing this through employers to the borrowers, whether it be residents of a county or the exact employees of that county. But really the reason we created Savi was, well, most of us are student loan borrowers ourselves. And we were going through this process many years ago where we were struggling with our student debt and we were trying to look through, well, what options exist and how do we get on these options? And that's really where we started to see the problems arise. Because again, so many people out there are struggling and don't realize that they have these great options available to them. But even those who do realize they have those options available to them have a lot of trouble navigating those options. And that is partially why we created Savi. In fact, we started Savi back in 2017. At that time, we looked at a great program that's available to all government employees called Public Service Loan Forgiveness. Many of us were trying to get through that program ourselves and realizing how much of a challenge it was. In fact, in 2017, only 1% of applicants actually crossed the finish line of public service loan forgiveness. And that's really what initially sparked us to create Savi. Since then, only 2.3% of those who have applied to public service loan forgiveness have been approved. Again, that's a pretty unfortunate number. It's not because they do not qualify. It's because of the challenges and confusions around this program, which I can get a little more into. But those who work with Savi, we have over a 99% success rate on all applications we send in. So really helps move the needle there, helps borrowers better understand their options and more importantly, succeed at getting onto those options, saving on average $187 a month and achieving over $40,000 in forgiveness on average.
Yeah, so how does the program work? We can get into the details of the different loan forgiveness options out there, because from a public service employer standpoint, obviously, that's the popular one that people know about, but there's other ones out there. How does the Savi platform work? Can you talk a little bit about how it makes it easier both for the borrower and the employer?
Yeah, absolutely. I think, a lot of how the Savi interface works, especially from the employee or borrower side, is going to be, if you've ever used a tool like TurboTax, the flow of it is a lot like that. We create custom microsites for every employer we work with. So it's as easy as just kind of sharing a URL with those employees, and then they get to navigate through this quick question answer format that helps them scan over 150 programs that exist. These are all federal and state programs that we're scanning through this. But again, the fact that there's 150 programs kind of speaks to part of the confusion with all of this. 17 different repayment programs, 9 different forgiveness programs. Like you said, there's much more out there besides public service loan forgiveness. And sometimes it's about pairing multiple programs together. And so when you use the Savi tool, we ask a few questions. It's really easy to use, takes most borrowers 5 to 10 minutes. And then we'll let you know every single program you qualify for and the impact of all those programs. And we actually do that completely for free. On the employer side of this as well, since you flagged that we do a lot for them as well, we have a few great tools. But one of employers' favorite tools is for all these ECF, employee verification style forms that are needed for these programs. These are things that employers are already dealing with. Savi actually automates that process for those employers as well. So really helps ease the lift. Again, this is something that employers are most likely already dealing with. Someone in their department is, and we save them a lot of time on that end. The other great thing for Savi is we have a live dashboard that shows kind of the impact of the benefit, how much employees are saving, again, helps you kind of process all these forms, making life a lot easier. And we've seen a lot of counties utilize that information, to talk about the impact they're seeing with Savi, and it's been pretty tremendous. We've also seen those counties, say a lot of times that they are able to use those numbers to help recruit, especially in the younger sections, trying to get younger employees to come work for the county.
Yeah, I've actually heard that from some of our counties as an employee retention tool, that the interest has been from that standpoint because, as things change in county government, we used to be really rich on the benefit side. That's kind of changed a little bit over time. It's become very expensive. So what are other options for counties to use to keep their employees? And this is another great option out there. Can you talk a little bit more specifically on the public service side? That the tool that Savi's providing for counties in that space, because I've heard from some areas the amount of paperwork required, not for the borrower and the employer side, is just monumental. And you talked about some of those success rates. Can you get a little more into the specifics there, a little bit on that specific? You talked about the 150 options out there, but this is the one that most people want to talk about.
Yeah, absolutely. And again, the reason so many people want to talk about it is because of that high decline rate. We've seen two major things happen on that. And one is we've seen about 15% of those who qualify for public service loan forgiveness have applied. So again, part of this is also just making sure people understand these programs exist and understand the impact. But the other big one that we talked about was that only 2.3% acceptance rate. And that really comes from misunderstandings around the public service loan forgiveness program. So I think one of the biggest points of confusion has been the program is often talked about as after you do 10 years of service, you get forgiveness on whatever debt remains, right? And that's partially true. But what the federal government is really looking for when you're applying for these programs is that you've made 120 qualifying payments. Now, that does come out to 10 years of service. But again, if you weren't making the correct payments during that period of service, it's a lot of what causes these errors between that and just missing information on paperwork, misfilled out paperwork. So those combinations is what's led to that really low acceptance rate for those applying on their own. Now, what Savi again is going to help you understand is it's going to help you which payments are qualifying payments, which aren't. It's going to get you on the right qualifying payment plan where you're actually lowering your monthly payments, again, on average by $187 a month, which is also going to not only make it easier to get that forgiveness the second you've made 120 payments, but it's also going to most likely increase the amount of forgiveness you see, since it's a combination of getting on a qualifying payment plan to lower those monthly payments and get those qualifying payment types. And then you get that forgiveness at the end of that route, which leads to a lot of forgiveness. So really good programs to combine, but also really important to combine them to make sure you get the forgiveness you deserve. And that's really a lot of where we've been seeing the errors happening.
Yeah, and I know you guys have been working with some Michigan counties outside of Michigan counties through the partnership with NACO. Can you talk about some of the successes you've had in those counties and where things have been trending?
Yeah, absolutely. We've been seeing some pretty amazing impact, and we've really been seeing this grow very rapidly through counties. Savi historically, we started out first with education when we first launched a lot of education institutions. Then we worked with a lot of healthcare institutions, and more recently, a few years ago, I guess NACO approached us, and really since then we've launched with so many counties. I honestly can't even remember the exact number off the top of my head, but it's been amazing to see that. But more amazing has been the impact that we've been seeing for these counties, right? We've been seeing, again, on average, these county employees are saving about $150 a month. So a little bit different from our normal average, but still pretty outstanding, close to $2,000 a year. And then on top of that, they're seeing over over $40,000 of forgiveness, similar to our other averages. So amazing to see those roll in. Again, it's all going to be relative towards each person's life, but that's part of what creates that big impact. So, a great example of how big this impact can get is actually my case. My wife is in the medical field, so we have $250,000 of student debt, which is actually below the average for a medical student at this point, which is crazy to think about. But what that meant for us is we were supposed to be paying $2,647 a month. Just for the record, that's more than half my wife's take-home pay. She makes about $65,000 a year as a resident here at GW. And so it just was a non-starter for us. We just couldn't afford it. And we see a lot of people say they can't afford their student debt. In fact, 40% of borrowers say they can't afford it with their income and savings. So with that in mind, we were able to use Savi, get onto a payment program called Pay. It reduced our payment down to less than $100 a month. So tremendous savings, just letting us live our lives. I really don't know what we would do without that kind of payment program on a day-to-day basis. But then on top of that, it's a great encouragement for my wife to stick with the job that, quite frankly, she loves. She loves being in the public sector. She hopes to continue to be a teaching doctor someday. And so knowing that when she pairs this savings with the forgiveness that will come after 6 more years of service in her case, she'll see $200,000 of forgiveness is what we're expecting. And that is just a tremendous impact that makes it a lot easier for her to stick with this job that she loves so much.
Yeah, again, goes back to that employee retention component. She can see what the benefit is of having that loan forgiveness. Now, obviously, there's been a lot of volatility in Washington with federal funds and things like that. Can you talk a little bit about how some of these programs that you're applying or helping folks apply for may be impacted, or will they be impacted?
Yeah. That's obviously a question that's coming up a lot right now. I think with each what we've seen historically, so the first income-driven repayment program started back in 1993 when they realized that, this debt was becoming such an issue for people where, people weren't paying their debt. And when you're not paying your debt, obviously it's hurting your credit score. They're gonna come after, if you're defaulting or in delinquency, which we've seen delinquency rates increase past 16% right now. Not only does it hurt your credit score, but they can come after your tax return. And if you go too long, they can even garnish wages. So really important for borrowers to make sure that they're on a payment plan that they can afford. And that's why the federal government originally created those payment plans to help people. Student debt has actually increased by 850% since that first payment plan. And the other thing on top of that, is we've seen each administration kind of try to bring forward new things, and it's always with the mindset of helping borrowers, but it can often create confusion, right? The public service loan forgiveness started with Bush in 2007. Obama added repay. Trump did an expansion of the public service loan forgiveness program last time he was in office. He also did the payment pause and allowed for credits towards public service loan forgiveness even during the payment pause. And then Biden attempted to update repay to save. Now, most of these programs that we've been talking about here today are actually acts of Congress that were signed into law by presidents. So most of them require Congress to take action on it. This is any changes towards public service loan forgiveness or many of the income-based programs we've talked about. Now, to your point, there has been some shakeups. And so two things I would really highlight there. First is there's been two executive orders we've seen that I want to focus on mostly. One is Trump made an executive order around public service loan forgiveness, mostly to highlight that he wants public service loan forgiveness to exclude organizations, I believe the exact quote was, engaging in activities that have a substantial illegal purpose. Again, both Trump and Linda McMahon are on record saying that public service loan forgiveness is expected to stick around. And again, this really has no effect on government employees getting their rewards from public service loan forgiveness. But that's one order that you might have seen talked about. Linda McMahon has also recently said that they continue to have programs like the public service loan forgiveness buyback program and other things. So good news on that end for public service loan forgiveness. Anyone seeking that, their public service loan forgiveness is also in many people's promissory notes and things of that nature. So the other change we've really seen that might have more of an immediate effect on borrowers is there was an executive order to start dismantling the Department of Education. Now, again, to completely dismantle the Department of Education would likely require an act of Congress there as well. But we've already seen about 50% of the Department of Education let go. What this really means, we see for borrowers is just it likely adds to confusion. I know in 2024, the average wait time for calling student loan servicers and the Department of Education was over an hour with very large disconnection rates. So it was already a confusing point for borrowers that caused a lot of borrowers to give up on these processes or just continue to be confused and frustrated. Fortunately, I would say one great thing with Savi is, our customer support team is here to help borrowers, even whether it's our free tool or our premium tool. We have a lot of great ways to help borrowers. We have a call center. It's a US-based call center with a wait time of under 2 seconds. So big difference from that other wait time we were talking about that seemed to only be getting worse. We host a lot of great educational webinars. I know some people listening to this might have attended some of those. And we host constant webinars each month to inform borrowers anytime there's a policy change, anytime they might have questions. We also have live chat features. We have that's manned by humans. We have a chat bot if they rather talk to a robot, but we do have a live chat manned by humans. So a lot of great ways to help borrowers. And I think if I could really put anything out there, that's really our goal, right? We started out being borrowers ourselves, then being advocates for these borrowers, then realizing one of the best ways to help borrowers is with a really smart technology tool. But we always want to stress that we pair that cutting edge technology with borrower advocacy. And that's what our team is mostly made up of, is borrower advocates who are here to answer borrowers' questions, help them through this process, help employers understand this process as well, answer any of their questions, since I know employees constantly ask those employers questions. So that's what we want to be, is just really, thought leaders and experts for these borrowers, for these employers, to make all of this as easy as possible and remove this really large burden and lift that has existed for years that we personally got frustrated with. And that's the whole origin for us.
Yeah, and as we kind of wrap things up here, can you talk a little bit about how, you've got some employers probably watching this or listening to this right now, county administrators, county commissioners. How can they work with Savi to provide this benefit to their employees?
Yeah, that's great. Really, really easy to launch with Savi. You can, of course, talk directly to, your representative at MAC, but you also are welcome to reach out to me. My email is very easy. It's Tony@bysavi, SAVI.com. So feel free to reach out to either of those representatives. Obviously, Steve and Derek know directly how to connect with me as well. But launching the benefit is one of employers' favorite parts. There's no IT setup required. Really, all we need from your side is a contract saying you're working with us. So really easy to launch it. Then we just build that custom microsite for you. Get this out to get the free calculator tool out to your employees. Help them navigate all of this, and they can work with us as well to file those applications, and we can help on the employer side completely automate those applications. So really easy to get started. Just shoot me an email. Shoot the MAC team an email. Either one works for me. But we're happy to help.
Yeah, and I've seen that microsite, and it is great for counties because it does give you total numbers on what you're saving your employees, some really good statistics you can share with those employees, and that calculator is a great tool as well. So anything else that we might not have touched on, Tony?
No, I think those were great questions. I appreciated that we covered a lot, and I appreciate
did.
everyone listening. Definitely just a really great and easy to implement tool that I can't stress how much of a difference it makes in people's lives. Again, speaking from very personal experience here. So I appreciate you having me on, and I appreciate everyone listening in, caring and wanting to help their employees, their residents, their borrowers. So thank you.
Yeah, no problem, Tony. Thanks for joining us today. Feel free to reach out to Tony or Mac if you have any more questions on Savi, and we'll talk to you soon. So thanks for joining us, everyone. Take care.
Thanks.
Thank you for listening to today's episode of Podcast 83.